Well, welcome back to Finance Uncut. On today's episode, we asked the question, was silver ever $400 an ounce?
This is entitled, Why the Silver Bull Run is Inevitable. And this goes back to something I've talked about in previous lectures, but this is a chart I'll get to in a minute, but it was produced in Forbes magazine after Warren Buffett bought 130 million ounces of silver. It really was 129.7 if you want to split hairs. And what he did was he bought it at an all-time low on an inflation-adjusted basis. So this chart I've used in lectures in the past, haven't really talked about it in quite a long time, but you see the chart starts at the year 1364, if I can read that, or 44 rather, and at that price on an inflation-adjusted basis. So this takes the inflation lie out of the silver price. So we're looking at constant, and this was done in 1998 dollars. So those have changed. We're 23 years ahead of that now, but we could do the same thing over again, and we would get a chart that's inflation-adjusted. So $400 here is the same as $400 here, and $400 here, and $400 here, which on a non-inflation adjusted basis is not true. So we're comparing apples to apples. I hope that's clear. If not, do a search engine, study it, read it, you'll get it. So what we see is way back in the mid-1300s, silver was about $400 per ounce, at least in 1998 dollars. And it stayed around that level all the way, and I'm just doing this roughly, as you can see. I'm going to come down here to about 1544, so about 200 years. And then it kind of dropped, came down, and it stayed around this level, which I'm going to call $200 an ounce. And I'll call that from 1564 to, let's just take 1744, so another 200 years. So 200 years at $400 silver, 200 more years at $200 silver, and then you get down here into this range here, and we'll flatten that out around 100, and that was from roughly 1784, it looks like, to 18, we'll call it 84, we'll make that 100 years. So people talk about, what's silver's true value, what is it worth, blah, 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 blah. This is history, this is fact, this is what it was considered. And remember, during this entire period, silver was really one thing, it was money. That's all it was, which there's nothing wrong with that. It's just that today silver is not just money. It's really an industrial commodity as well as money. So then after the crime of 1873, writing this thing, and when silver was demonetized, you see it fell off really substantially because it wasn't considered or used as money anymore. Well, it was still in circulation, but it wasn't, it was demonetized. You can look up crime of 1873 and get a better look at that if you're interested. And then we had the big move up in 1980 where we got to a ratio of about 16 to 1. And then right here in 1998, when this came out, is where Warren Buffett bought, which is, as I say in this article, an inflation-adjusted all-time low in the silver price. So as you can see, that, as I say in the article, timing is everything, especially in a fast-moving market. Now, remember, I've said that silver will scare you out or wear you out. It can be very fast-moving. It can spike up and down and really scare you, depending on what side of the market you're on. Or it can wear you out and just go in a trading range for seemingly forever and just grind and grind and grind. So it doesn't have a habit of just being very volatile. It has a habit of being very volatile at times and very sleepy, I'll say, at other times. So a reminder that 90% of the movement lasts 10% of the time. Remember, that's just a guideline. It's not exact, but the third leg up is usually the most powerful. It's not in price appreciation, but not in time duration. So as this article points out, there are asymmetric gains to materialize, I believe, silver particularly more than gold for a number of the reasons that I've outlined. And part of it in this article is how much has been used by industry over the years.
Thanks to SRS Rocco for this chart. Now, as David Morgan said just before, that when silver was money, its value was quite high. When it was no longer money, it fell quite sharply. Now, we know the fundamentals for silver from an industrial point of view and an industrial demand. But what actually drives the price of silver is the investment demand. And many of the best analysts in the silver space that I follow agree with me that the data shows that when there's physical or investment demand, that the price of silver follows suit. And when so that's up and down. That's up and down. So even though I've shared in many videos that I am very bullish fundamentals for silver from an industrial point of view, and that will have an impact on the price of silver, the real driver is the physical and ETF investment demand, and you can see that from this chart right here. Now, what I found interesting in this article, which David actually doesn't mention during his video, is this little paragraph here. With the rise of digital currencies, it is worth noting something here. With only 21 million Bitcoin that can be mined in total, comparing the supply of Bitcoin with the supply of silver is an interesting contrast. There are only 2 million 1,000 ounce bars of silver, the commercial bars upon which the silver market is determined. So there are 1/10 as many silver commercial bars as there are Bitcoin, yet they are only worth roughly half of what a Bitcoin is worth. Bitcoin is in the ether, an intangible asset, whereas silver is an integral component in many of the devices that fuel our modern lives. Think about that. So that's an interesting little take on silver.
The manipulated paper gold price in US dollars is still below 1,750, still in a trading range due to the paper price smashes, with the auto program selling from trend traders and these high frequency trading algorithms that if the dollar gets strong or if yields rise, gold gets smashed. However, we are starting to see China and Russia start to step back into the market again with physical gold purchases. Recently, there was a tweet out from a well-respected market reporter that Russia plans to invest its sovereign wealth fund into physical gold, and definitely not GLD. One of those major reasons why, besides the fact that the gold price has been weak, so it is a good opportunity for people who are not short-sighted, who are not myopic, looking to accumulate more physical metal on dips, on weakness, which in my opinion is the best time to buy physical metal, is when the paper price is smashed a lot, on days when there is blood in the streets, on days when premiums are low. That is the best time to buy long-term, to accumulate more metal, to stack more metal for insurance, savings, and wealth preservation. But also because of the economic and political relations that the US government and the deep state and the military-industrial complex has with Russia. So things just keep getting worse, especially with the comments now that Joe Biden and his cronies and the deep state people have been making about Putin and Russia. So you have comments now from Russian officials, top diplomats from Russia, talking about reducing their dependence on the Western financial system, on the dollar, which normally means historically over the last 10 to 15 years that China and Russia will continue to accumulate even more physical gold. Now, China did not buy a lot of physical gold in 2020, according to any data I've looked at, but the amount of physical gold that China has bought starting in January has started to pick up again, especially in the private sector in China, but also looks like the government moves metal in through the Shanghai Gold Exchange, according to my source in China, that one of the ways the Chinese government stealthily moves physical metal into China, there's a number of different ways, is through the Shanghai Gold Exchange, where they say that a lot of the metal is for the private sector, but it's actually one of the ways the government moves the metal in. So now you're starting to see evidence that these large governments, they're voting with their dollars, they're voting with their trade surpluses, they're voting that they don't like the system, they don't like the U.S. government. Join the club. I mean, there's a lot of U.S. citizens that don't like the U.S. government either. And that physical demand will put a floor in the paper price in the not too distant future. The other part of the equation here again is the Fed's balance sheet, which is up another $20 billion just this past week. So the Fed's balance sheet, while it did not go up $113 billion in a single week like it did last week, it is still rising. So we're going to see big moves in the Fed's balance sheet. We're already over 7.7 trillion. We're headed towards 8 trillion soon. Once we get over 8 trillion, headed towards 9 trillion, the correction in gold should be over very shortly, and the rally in gold should start very soon. I suspect that once the Fed's balance sheet goes above 8 trillion, substantially above 8 trillion, that the bottom in gold will be here, and that the rally in gold will restart, as the Fed's balance sheet is clearly headed, just with basic math, to 9 trillion, 10 trillion very soon. And that might be the base case. It might be a lot higher than that with some of the crazy spending plans that politicians and bureaucrats here in DC have. The other major story I wanted to talk about was how the Mexican central bank, the Banco de Mexico, has suspended production of the famous Mexican silver Libertad coin, according to Mexican billionaire Hugo Salinas Price. Now, they're using the pandemic as an excuse, but they could also be having problems sourcing physical metal. I think this is similar to the US Mint situation, where unfortunately a lot of these government agencies that mint these beautiful silver coins, they're run so inefficiently, very similar here in the US to the Department of Motor Vehicles, and any excuse or screw up is just magnified. So you have government incompetence from politicians and bureaucrats mismanaging the production of silver in a number of different countries. And now I think Australia, Canada, the US, and now Mexico. And on top of that, you have supply problems in size. Even though I think Mexico is number 1 or number 2 in the entire world in annual silver production, it looks like the Banco de Mexico, Mexico's central bank, is still having problems sourcing physical silver to keep up with demand to make their sovereign silver coins.
I'll put a link in the description to this video. If you're not subscribed to Jason Burack's Wall Street for Main Street, do so. Jason has a great understanding of Austrian economics and really has a lot of good content. So what do you think, everyone? Do you think that silver can get back to $400 an ounce? Look, I've got a video coming up in a couple of days with a very exciting projection, or should I say target price of a very successful trader on silver. I'm not going to give away the price targets on this video, but stay tuned. In a couple of days I'll put this video up and you'll be quite surprised at his 2 targets. He's got 2 targets for silver, and those targets, the time frame for them is actually not too far away. But what do you guys think? I thought it was quite interesting. The David Morgan chart, adjusted for inflation. We can see from this video from Jason, Russia and China have been buying gold for the last decade, but especially the last 4 to 6 years, and really stockpiling gold and silver. And we're hearing talk now that Russia plans to continue to increase their gold holdings and move away from being reliant on the US dollar. And obviously China want to do that as well. So, and now we've got the Mexican central bank not producing these Libertad silver coins. You've seen from my previous videos the supply issues, the fraud with unallocated silver at different mints, Canadian, US, Perth Mint. The demand for silver is exceptional. There is no supply. Any economic theory, you don't have to be an Austrian economist to understand that the supply-demand side of things doesn't add up. So anyway, what do you guys think? Love to see your thoughts and opinions in the comments below. Hit the like button, subscribe, hit the notification bell, share the channel. Until then, I'll see you again on another episode of Finance Uncut.